Ladies and gentlemen, thank you for standing by, and welcome to the Eventbrite Q4 2020 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question-and-answer session. To ask a question during the session, you'll need to press star 1 on your telephone. Please be advised that today's conference is being recorded. If you require any further assistance, please press star 0. I would now like to hand the conference over to Mr. Ronald Clark, Head of Investor Relations. Please go ahead.
Good afternoon, and welcome to Eventbrite's Q4 and fiscal year 2020 earnings call. Prior to this call, we released our shareholder letter announcing our financial results. It can be found on our website at investor.eventbrite.com. Before we begin, I would like to remind you that during today's call, we will be making forward-looking statements regarding future events and financial performance. We caution that such statements reflect our best judgment as of today, February 25th, based on factors that are currently known to us, and that actual future events or results could differ materially due to several factors, many of which are beyond our control. For a more detailed discussion of the risks and uncertainties affecting our future results, we refer you to the section titled Forward-Looking Statements in our shareholder letter and our filings with the SEC. We undertake no obligation to update any forward-looking statements made during the call to reflect events or circumstances after today, or to reflect new information or the occurrence of unanticipated events, except as required by law. During this call, we will present Adjusted EBITDA, a non-GAAP financial measure. This non-GAAP financial measure is not prepared in accordance with generally accepted accounting principles and has limitations as an analytical tool. You should not consider it in isolation or as a substitute for analysis of our results of operations as reported under GAAP. A reconciliation to the most directly comparable GAAP financial measure is available in our shareholder letter. We encourage you to read our shareholder letter as it contains important information about GAAP and non-GAAP results. And with that, I'll now turn the call over to Julia Hartz, co-founder and chief executive officer.
Thank you, Ron. Hi, everyone, and thank you for joining us on the call today. 2020 was an exceptionally challenging year for the live events industry, one that tested old norms, prompted deep introspection, and resulted in profound change. At Eventbrite, we celebrate the incredible resilience and ingenuity of creators all over the world. In the face of unprecedented adversity, they reimagined gathering and reinvented their businesses. Despite restrictions on in-person gatherings, our global community of hundreds of thousands of creators continued to bring people together in inventive ways. From virtual events to drive-ins to cleverly social distanced experiences, and they hosted an astounding 4.6 million events on Eventbrite. Creators have continued to rely on our platform through the pandemic because we provide them with the tools and support to help them succeed as the landscape shifts. The flexibility and functionality of our platform have encouraged creators to adapt and grow. We have one goal: to help our creators succeed. It's this laser focus that has cemented our position as the platform that creators turn to while navigating uncharted territory. Every day, we see creators taking advantage of what we offer in unique and inspiring ways. I had the pleasure of speaking with several of our frequent creators recently, all of them featured in our shareholder letter. I want to share just one of the stories with you because I think it illuminates the power of accelerated positive change brought on by crisis. London Drawing Group is a teaching collective founded by Louisa, Lucy, and Francis, 3 friends who met at the Royal Drawing School in London. Their mission is to make art accessible to everyone. Prior to COVID, they leveraged Eventbrite's platform to host fun and engaging classes and workshops at famous museums and other historic venues around London. As the pandemic closed museums to the public, these 3 entrepreneurs quickly pivoted to hosting virtual workshops, and they have seen their business explode because of it. Tapping into Eventbrite's global audience of people looking to connect while in social isolation has encouraged them to host more events and expand their customer base from local to global. In fact, they increased paid registrations from about 1,200 in 2019 to nearly 53,000 in 2020. As they look forward to bringing back their unique in-person experiences, they also plan to continue their online events program, which is allowing them to reap the benefit of the expanded audience they've built with Eventbrite's help. What I'm most proud of in a year full of challenges is that we didn't just sit on the sidelines. We showed up every single day and worked to retool, reimagine, and reinvent our business alongside our customers. The developments on vaccine distribution and virus containment are setting the stage for the return of in-person gatherings and ultimately the recovery of the live events economy. At Eventbrite, we have spent the last year preparing for the future by focusing on 3 important strategic objectives that we outlined back in May. Those are 1, delivering an intuitive self-service experience that helps creators get events up and running quickly and confidently. 2, creating flexible and efficient solutions that address our most active creators' needs. And 3, offering more ways to drive attendees to Eventbrite creators' events. In 2020, we made excellent progress on each of these objectives, and our execution against 3 initiatives is meaningfully enhancing our business for the long term. Eventbrite has become a more focused company with a roadmap aligned to the needs of our most valuable creators. We are generating a greater proportion of customer acquisition through our most efficient and profitable channels. Most importantly, our strategic focus, expense reductions, and new senior leadership in engineering are enabling us to invest in initiatives to drive future growth as the recovery builds. With these changes, we believe Eventbrite will emerge from this crisis as a much stronger company, driving sustained growth and strong bottom-line results for years to come. Before I turn it over to Lanny, I want to thank the Eventbrite team. Many companies have suffered during this time, and we're not unique in that regard. Where we are unique is how we've approached the struggle, leaning into the opportunity to become a stronger, more focused, and agile company. This is a direct result of the dedication by our Britelings who act as owners of this business and advocates for our customers. I also want to express my sincere appreciation for the hundreds of thousands of creators who have trusted Eventbrite to help them through this past year. Every day, we work on your behalf as you bring the world together again through live experiences. And with that, I will turn it over to Lanny.
Thank you, Julia. I'll discuss a few of the details within our Q4 results and then turn to what we're anticipating in terms of recovery and how we're planning for 2021 and beyond. Fourth quarter revenue was $26.7 million, an increase of 22% from the third quarter. While revenue was still down 68% from a year ago, that comparison is 5 percentage points better than it was in the third quarter. Paid tickets grew by 19% from the third quarter to the fourth quarter, driven by a 44% increase in paid ticket volume inside the United States and a 6% decline in paid ticket volume elsewhere, largely corresponding to the United Kingdom's nationwide lockdown that started in November. Globally, paid tickets for in-person events grew 22% from the third quarter to the fourth quarter, and paid tickets for online events grew 14% to a new all-time high in the fourth quarter, up 16 times from a year ago. Based on recent experience, we anticipate that near-term trends in tickets for in-person events will be closely linked to local health conditions, and that tickets for online events will remain higher than pre-pandemic levels, even as local markets pivot back toward in-person gatherings when safe to do so. Cost of revenue was $13 million in the fourth quarter, and that included a $300,000 benefit from refunded processing fees. Excluding that item, cost of revenue was equal to 50% of revenue for the quarter, and the underlying gross margin was also 50%. That is a 9 percentage point improvement in gross margin compared to the previous quarter. Increases in ticket volume and revenue provided margin leverage here, and we expect gross margins to scale above 60% as a fuller recovery takes hold. Total operating expenses were $26.9 million for the fourth quarter. However, there were a number of non-operating factors within that figure. Specifically, we recorded another $14 million reduction to the reserve for advanced payout losses. We also had a $2.9 million benefit relating to the settlement of a contract dispute. Both of those items flowed through the sales and marketing line on the P&L. And finally, we recorded a $4.1 million write-off and increase to reserves related to contract advances. These were recorded on the G&A line in the quarter. Excluding those items, the company's underlying operating expenses were $39.7 million in the fourth quarter, down 41% or $28.1 million from the fourth quarter of 2019. On a similar basis, cash expenses excluding our processing fees were $29.1 million in the fourth quarter, slightly better than our outlook of $30 to $32 million for the period. Adjusted EBITDA was $2.2 million for the fourth quarter. However, excluding the unusual items just discussed, adjusted EBITDA would be a loss of $11 million for the quarter, or just under $4 million per month. The expense reductions executed in April 2020 have clearly been effective in lowering the company's overall cost base. And those actions have also changed the internal dimensions of our business model. A year ago, sales and marketing expenses were 1.5 times as large as our product development investment. In the most recent quarter, that relationship has been flipped, and product development expenses, which are down year to year, are now 1.2 times larger than our sales and marketing investment. Those figures exclude exceptional items, and the exact expense ratios will fluctuate in the future. However, the main point here stands. We've dramatically lowered costs and shifted our expense profile toward the more highly leveraged, less variable aspects of the business. We believe the benefit of these changes will be increasingly evident as we emerge from the pandemic. Turning to the balance sheet, we ended 2020 with $506 million in cash and cash equivalents and $207 million in carrying value of long-term debt. At year end, we held $191 million within our cash balances that represents ticket sale proceeds that are payable to creators. The company's available liquidity was $332 million at year end, up from $190 million a year ago, reflecting the steps we've taken to strengthen the company's financial resources during the pandemic. For reference, the method by which we calculate liquidity is laid out in the shareholder letter. Throughout 2020, we worked closely with creators and Eventbrite ticket holders to navigate an unprecedented environment of event cancellations, rescheduling, and postponements. I believe it's a strong testament to the resourcefulness of our team, as well as to the trust and community that exists among our creators and attendees, that since the start of the COVID pandemic, we've incurred only $2.4 million in chargeback and refund losses against an initial advance payout balance of more than $350 million last spring. We've begun to gradually reopen our advanced payout programs to support creators as they're planning new events. And we will manage our exposure carefully with more restricted access and higher reserve requirements. Planning for the recovery of in-person events is center stage for us right now. Based on recent trends and available information and forecasts, we do not currently anticipate an upswing in in-person events in the first half of 2021. Paid ticket volume in January and the first half of February is trending about 20% lower than in the fourth quarter, as the United States and UK have reimposed COVID-related restrictions on gatherings. However, vaccine rollouts have begun to accelerate around the world. And as we've already seen in some locales, a recovery in in-person events, when it comes, could gather momentum quickly. For instance, in Australia, where transmission rates have decreased and social distancing mandates have eased since the latter part of Q2, Eventbrite's paid ticket volume jumped by 3.5 times from the second quarter to the fourth quarter, with paid in-person events more than doubling and paid tickets per in-person event growing threefold in that country. In the fourth quarter, the number of in-person events on Eventbrite in Australia had nearly returned to prior year levels. And in December, paid tickets in Australia were back to 87% of year earlier pre-pandemic levels, propelled by the rapid recovery of in-person events. This is in a country where intermittent lockdowns are still occurring. With that kind of recovery momentum potentially in the offing elsewhere in 2021, we're taking steps now to ensure platform stability, to streamline creator onboarding, and to ready our marketing plans for when the time is right. Our product plans, including how we're integrating tone dense capabilities, are designed to serve the needs of frequent creators in a recovery and well beyond. In closing, 2020 was a challenging year and one that demonstrated Eventbrite's ability to execute under pressure. We've reshaped the company with a significantly reduced cost base, a business model with fewer variable costs and higher operating leverage, and a clear focus on what we believe is the most attractive segment of the live events ecosystem. Eventbrite's creators are resilient, inventive, growth-oriented around the notion of bringing people together, just as we are. And in the same way that we stood by our creators throughout the pandemic, we will be ready to propel them when in-person events resume in full. And with that, we'll now take your questions. Operator?
If you'd like to ask a question at this time, please press star, then the number 1 on your telephone keypad. If you would like to withdraw your question, press the pound key. We'll pause for just a moment to compile the Q&A roster. First question comes from Doug Anmuth with JP Morgan.
Hi, good afternoon. This is Daly on for Doug. Thanks for taking the question. First question I had was, I appreciate the color you guys gave around Australia, but I was hoping if you can provide further details on the type of events that are driving the recovery there, and if there is anything you see in Australia that makes you think event mix pricing or monetization might look different coming out of the pandemic on a more global basis. The second question on Lanny, to you, Lanny, could you provide a little more color on which areas you were able to reduce costs beyond your original target, and how much of the overall savings are volume related and would need to come back with the recovery?
Yeah, thanks so much for your question. So I'll answer the first part and then hand it over to Lanny. You know, in Australia, as the restrictions have eased, we're seeing patterns that we would expect to see stateside as well, which is smaller, frequent, local events are coming back first. Mind you, they're in a better place in terms of virus containment versus the United States, but they still have restrictions on traveling between states in the country. And so, you know, the types of events that we're seeing on the platform are the types of events that are our bread and butter. They're the core creators that are frequent, hosting paid and free events more often. And that's what we're seeing really spring back. So it gives us a good indication of what we might see here. Lanny, did you want to give some more color?
I think you've got it on what we're seeing in Australia. As you know, thinking about the other questions that you had around, remind me, Dave, your question was
where you saw more opportunities to cut costs beyond your original target, and then how much of the overall savings are volume related and will need to come back with the recovery.
Sure, I appreciate that. I apologize for getting. You know, when we originally set out to reduce expenses, there were really 2 or 3 things that were going on. One was a change in our service model, and there were an array of services, you know, kind of high-touch, human-powered services that Eventbrite provided to creators historically that were, you know, hard to differentiate, hard to build really strong margins in them, and were not naturally scalable activities for us. And we put those alongside the sort of technical deliverables that we have, the product and the marketing and the ease of use and the self-service model. All of those attributes are very differentiated. Eventbrite's got a full-service platform that really stands apart from other competitors. They're very, very leverageable, and they're very scalable. And so we decided to remove from our service offering some of those higher touch services. And they had a lot of expenses in them. So the bulk of the expenses were really associated with the permanent reduction and elimination of a set of menu items that we provided in the past that we're not going to provide in the future. So that was sort of number one. Number two was thinking about things like our office space and our contracts with outside parties and our software licenses and our just kind of, you can imagine top to bottom, an opportunity to reassess, renegotiate, resize for the environment, some of those fixed cost investments. And that's probably the place today where we saw a little bit more than we expected, where we found some room to renegotiate things and sort of eliminate things a little bit more than we thought originally. In terms of your second question about variable costs and volume related, the expense reductions that we took, I would classify them as they were structural moves. These were not sort of momentary measures that were going to spring back and reinflate those expenses in a recovery. They're really the $100 million of expense reductions that we made is intended to really reorient and reprofile our business model. So I don't think very much of the expense reductions that we're seeing are variable. Now, if you look at our cost of revenue, there is a portion of cost of revenue that is processing fees on transactions, and that's obviously very variable. But of the $100 million of savings that we're talking about, that does not include variable volume-related expense reduction. That includes only the structural measures that we've taken.
Okay, that makes sense. Thank you both.
Thank you.
Once again, to ask a question, please press star 1 on your telephone keypad. Next question comes from Ryan Sundby with William Blair.
Yeah. Hey guys, thanks for taking my questions.
Sure thing.
I thought the info on Australia was great. So we can go back to that. Could you just talk about what your visibility looks like before you see a market kind of pick up like that? And maybe you could even go back to pre-COVID days. I mean, what kind of line of sight do you have for events that either are on sale today for later in the year, or can you see them in the development pipeline? And then also, how do we think about events that were postponed last year or rescheduled, for maybe next year? Do you kind of see that in your pipeline as well?
Yeah, sure. So I can talk about the visibility into, what we see in the pipeline. Generally speaking, from event published to event occurrence, it's roughly 45 days. So there's not, a ton of lead time for these smaller, more hyper-local frequent events. What we do see is trends on the platform through the data that allow us to understand what consumers are searching for, what tickets they're buying, what types of tickets. So, early on in the COVID crisis, we started to see consumers searching for online events, and we started to see creators searching for different integration partners like Zoom, which really gave us an early indication as to where we could pivot our efforts to help our marketplace thrive through this period of time. In essence, 1.4 million online events happened in 2020 because we were able to capture that data and act on it quite quickly. In terms of a geography trend, I think that what we're seeing in Australia is very interesting. I think it's certainly gives us an indication of what could happen in other markets, but I think each market is going to be unique. It's going to reopen at different times. We know that this year in 2021 is going to be full of, volatility We think, generally speaking, as we make it through to past spring, where life's not really changing much for a lot of us, into summer, we're going to see in the back half of the year just a much stronger recovery. We don't know what kind of shape that's going to take. Obviously, we're not here to predict the future, precisely, but we are here to be prepared for that comeback. And that's really what we've been doing, is looking at what types of events are coming back, how frequently are they coming back. One of the trends that I think is interesting, and I'll just throw in there, is that events per creator has nearly doubled in this past year. So the creators who are on the platform, and we actually welcomed 330,000 new creators onto the platform during this time, they're hosting more events per creator. And so that's just giving you an idea of how, in a year where no events virtually were happening, 4.6 million events happened on our platform. And that's the same amount that happened in 2019. So I think that given the volume and the shift from offline to online, we're going to see some really interesting trends that we can capture based on the experience in the last 12 months.
Yes.
And then on the rescheduled events, I think that certainly, when we think about the festival season in the summer and and the variability in that, we take a very conservative view on large scale festivals happening this summer. I think that those fan bases and those communities are going strong. They're finding ways to stay connected. But I think you should expect that festivals are either going to move out towards the fall months or into 2022. I mean, I think across the board, that's just sort of the common sense will prevail on that, and we'll see a slower summer festival season this year. Lanny, is there any other color that you want to add to that?
Yeah, I would. In looking at our the events that were scheduled before COVID hit us, so. Go back to things that were on the calendar early 2020. Some of them were for the summer of 2020. And we've talked about our advanced payout balance. Of those events, about half of them have been scheduled once and rescheduled. And about 90% of those events are currently scheduled to occur sometime before the end of the third quarter. So the creators have plans. They are working to ready themselves. We're hopeful, just as they are, that we're able to do that. But as Julia said, I think it's early to be convinced, particularly on some of the larger events, that those are really going to be feasible. But we're here to watch that and support that, and certainly, if conditions make it possible, we'll be right there with our creators.
Yeah, great color there. Julia, I want to follow up on your comments around events doubling per creator. Is that, can you give us a little more color on what's going on there? Is that an outcome of some of the tools you put in place for the higher frequency self-sign-on creators? Is it more something unique around, this mix towards online this year? I'm just kind of wondering how we should think about that kind of going forward, from here.
Yes. Sure. Thanks for the follow-up, Brian. So it absolutely is driven by our focus in not just in 2020, but in 2019, focused on frequent creators and the product. I mean, if you look at how we're a new company, effectively, given how we have, redeployed capital after cutting costs towards product development, and we're doubling and tripling down on the frequent creator experience. So both how they can onboard, to how they manage more than one event at a time, to how they can promote a portfolio of events and then analyze what's worked and do it over again. And you'll continue to see us focus on that as we continue on here throughout the year, but also being able to drive demand to a global audience versus their local audience. Many creators, and the ones that we highlighted in our shareholder letter for sure, have transformed their business from something that was a local business to now an online global business. And they plan to continue to do both post-pandemic. Now we'll see, we're excited to see what happens, and we'll be there to support them in being able to build a business like that on one platform. But I think the types of events that are being created by these core creators who are hosting far more frequently than prior to COVID is just another confirming fact that our strategy to focus on frequent creators is correct, because these creators are resilient. And so we're looking at every way that we can through the product and through our service, our customer service experience, to lower the barriers for creators to help them rebuild their businesses post-pandemic.
Again, great insight there. Maybe if I could sneak just one more in here, because it doesn't really talk about it that much. But the 44 million people that attend events either through your website or through your proprietary channels, can you talk a little bit about them more in terms of, I know that the platform's being used kind of differently this year, right? More online. We're seeing it for different events, like even vaccine distribution. So I'm just wondering, are you attracting new people to the website side of the platform? Are they behaving any differently? Are you seeing them kind of come back and do new events after they try it once? And then also maybe just a little bit more on how ToneDen kind of fits in with that view as well.
Absolutely. So the mechanisms for us in terms of how we attract and help build audience for our creators and then convert them into repeat customers for those creators is one that has several vectors. So the first is pushing. We push content out to consumers who have bought a ticket on Eventbrite, and we recommend new events to them based on their interests and the events that they've attended in the past. We also pull them in by sharing curated content. What's going on now these days, mostly online, that really maps to their interests, and we help them discover new formats. We then create a retention strategy between consumers and creators by allowing consumers to follow their favorite creators or their favorite collections of events. So we've been working on that over some time, and it continues to grow in strength. And then finally, we have a broadcast and amplification strategy, which is really our deep integrations with other platforms where we're distributing content out and making it super simple and easy for consumers to convert into attendees, things like native checkout to platforms like Facebook. ToneDen is, really has turned out to be a timely move for us, because this is a small team